I think you should just see us as a square. Honestly, I mean,
Square.
yeah. So we're already at that stage now. You could say we're already building TeamApt or MoneyPoint 2.0 now. We started as PayPal, but now bringing in all the other 4 verticals: payments, credits, business operations, as well as cross-border payments. You could say those are our 4 pillars.
Thank you for joining us today, Tosin, and thanks for the introduction. Tosin, where are you zooming in from today?
San Francisco.
Nice.
Oh, wow. What time is it?
4:05.
Wow.
Right. So
wow, that's hardcore. I guess you were on the East Coast last week, right?
Yes, exactly.
I think we were at the same conference there. Obviously, you were on the big stage. I was on the little stage.
Oh, come on. Yeah.
I was. Your team mentioned you were at the Africa FinTech Summit in DC. Sadly, our paths didn't cross, but it's a delight to host you today. And thank you so much. We didn't realize you were in San Francisco, so really appreciate you waking up early or maybe going to bed late. We're not sure which one it is.
Yeah, it's fine. I mean, I'm pretty much still on in between New York and London time, so not fully adjusted. So it's kind of
so you're like on Bermuda time or something. Then.
Exactly. Exactly. So it's more like T plus or minus 4. I mean, sorry, T plus or minus 4. Yeah. Yeah.
So we, as preparation for this session, I did a bit of reading up. I obviously both Gaurav and I know a little bit about fintech in Nigeria and Africa, but you're the expert. And we did a little bit of reading up, and like a lot of people in the ecosystem, I think you came out of InterSwitch, correct?
Correct. Yes. I started in InterSwitch as a software developer, became an engineering manager, also became a product manager in that time. In that time, I kind of built a couple of systems, merchant acquiring systems, transportation systems, card systems, and also fortunate to also meet my co-founder also in InterSwitch. So
okay. Yeah. Nice. So for the people listening, either live or on replay on the podcast, tell the audience who don't know Nigeria so well a little bit about InterSwitch and the kind of almost sort of foundational role it played in setting up payments and electronic payments in the country.
Yeah. InterSwitch can be likened to like the first data of the US, or in a way also the early Network International of EMEA. And InterSwitch was one of the founding companies of financial technology. It started, I think, circa of the early 2000s, mostly by providing an interconnectivity network for ATMs around the banks, which kind of like started the whole cashless revolution in Nigeria, because that's accelerated people's confidence in leaving money in their bank accounts because they could access it anytime through the ATMs. When I left school, I've heard of InterSwitch, and it was a cool place to work. So I got an introduction I got a referral from someone who used to work in InterSwitch at that time, who I had, assisted with 1 or 2 things while I was in school in Ife, because I kind of ran a consultancy team or firm in my university days. I used to build software solutions for people then. So I got a referral to InterSwitch, and let's say the rest is history.
And then you chose to leave InterSwitch, I think in 2015, and build the first iteration of the business you have now. Walk us through that journey about deciding to leave the mothership, setting up your own business. What was like the rationale behind that? What was the opportunity? And talk a little bit about what you were trying to build.
Yeah. I think I've always had it in mind that I was going to build something. I think I'm just a builder. I'm restless. And sometimes, just being at the front of things like this sometimes is kind of like it's more exciting. Let's put it that way. So I used to, like I mentioned, I used to build software projects and hardware projects in school. I thought I was going to build a Sony in Nigeria.
Wow.
Oh, I think I quickly realized that hardware needs a lot of government support, and it's pretty hard. And China is doing a very good job at it. So software it is. But when I joined InterSwitch was actually quite exciting, especially in the early days. And, for a bit, I thought about, I could build things here because I just wanted to build, right? So when it became quite getting harder to really express yourself, and it was 5 years, which was like a benchmark that I gave myself, I thought, it's time. The rationale I gave to myself then was, I think if I failed, my CV was to be better than it was if I stayed in InterSwitch. That being said, I should always caveat this because this is not a glory story. I mean, and it's not necessary that everybody takes such risks. I think it's all about what makes you happy. And for me, because I really loved to build, I knew that would have made me happier. So that's why I made that decision in earlier days.
And the original product, it was basically helping banks' back offices, right? How did you come up with that? What was like the market opportunity you saw?
Yeah. It was sort of like a UiPath. I don't know if you know the company called UiPath. The opportunity then was banks were trying to digitize their operations. They were also trying to build digital self-service channels for customers, like mobile web applications that customers can use to get services. That also meant that it came with the need to also digitize typically manual back office processes. So customer support system, settlement systems, reconciliation systems, assets and liability management systems. Those were the opportunities that we saw there. And also at that same time, banks were really, really looking forward to local grown solutions, because prior to then, they used to kind of get solutions from India, Europe, and they kind of like struggled with the quality of support that they got. So that was a void that we filled. We were a local solution built to tailored to their needs. We're closer to them in terms of the quality of the support that they get and the agility of customization. So that was we feel that niche. We feel that and kind of became, one of the largest software houses by the number of running projects, and to some extent also the project amounts that I think we're running at a point about $2 million worth of projects then. And it was good. It was good. It found some of the foundational moments for us. It grew us, made us quite gritty, because I will tell you, building a service company is not trivial. Massive, huge respects. Massive, huge respects to everybody killing it out there building a service-based company. You are typically the punching bag for every executive that's not performing. We throw you under the bus. It's part of the job. So that's how. But then again, like I mentioned, it was good. We had a lot of experience building that. We also grew to our knowledge about the space, which will help us in the next products that we built.
And then you pivoted or extended.
Pivoted.
Yeah. In a couple of years ago, and you've added a few new businesses. One is MoneyPoint, Monify. So one is I guess a consumer-facing business or an agency banking business, and one is more of a, you call it B2B business. Talk about how you went from having this kind of software services business aimed at banks to, okay, it's still finance, but it was
it feels like he went back to what he knew, Ronit. It almost feels like he started and he sort of went back to his like stomping grounds with InterSwitch and just went further.
Exactly. So, I mean, I think it's after you've done a couple of years working with the banks, you've learned quite a lot. You will become pretty much, aware of some of the weaknesses that they have. And the ultimate people suffering this were the consumers and the businesses themselves. So we saw a clear opportunity then to actually build a better financial product. Our mantra then was easier, faster, cheaper. That was our mantra for the consumers themselves. And we built MoneyPoint and Monify. MoneyPoint started as like a card acceptance network for agents. And now it has evolved to become like a business banking platform where businesses can handle their payment needs, their credit needs, their business operation needs, and their cross-border payment needs. Monify is simply a payment gateway, and it's a natural extension of the MoneyPoint product. We could call Monify MoneyPoint payment gateway, essentially. And of course, the evolution was simply because we saw a big opportunity. It was a bigger opportunity, far bigger opportunity than the banking service in the banks. Pretty much quite scalable. Total addressable market is pretty much half of the GDP of Nigeria, and to a very good extent also similar ratios for some of the biggest economies in Africa also. So we took the decision then to, build those two solutions. And 3 years down the line, here we are.
I want to bring Gaurav into the conversation so we can dig into some of the details of building this new businesses that you're doing. So Gaurav, over to you.
Thanks a lot, Ronit. Really appreciate it. Tosin, amazing story so far. I actually know Bill, by the way, the founder. So Bill, like me, is one of the oldest Verifone partners in the world. So I used to meet him in the US, yeah. So it's funny hearing your story because that's my business too in terms of technology provision. But you make things sound too easy, brother. You're not doing yourself a service. I'm being honest with you, because when you started talking about the torture piece and everything, I'm like, okay, now he's being realistic. Because I think one thing you've very, very, very sweetly forgotten to mention is the timeline for all of this stuff. Right?
Yes. Yes.
I mean, you make it sound like you've done this in 3 years, right? And yeah. I'll tell you, I know you've not done this in 3 years, right? No. This is a proper evolution. You've got so many moving parts. I mean, the most difficult thing for a software builder is to work with other people or manage a team, or to manage a team in a dynamic way of running a company, right? Yeah. And it's no offense to software builders. It's just that, very, very, very strong developers like to operate within very, very traditional spaces, right? Even the best ones sometimes with companies run 3 developers, but then their company runs millions because they've got great scalable software. Yes. But with you did the software piece. You had your time with experience with with the companies, but then you went and started solving problems that the other ecosystem players had. And then you went back into sort of a space you knew very well. And I don't mean to dilute what you've done. You did InterSwitch, not 2.0, but you did InterSwitch 2.0, and then you did InterSwitch 3.0, right?
Yeah, yeah.
If I'm talking from one brother to another brother that's in the space of right, for other people to conceptually understand. So, but this is what, a 10-year journey, Tosin? Come on.
2015 to 2017, that's 2022 to 2015, that's 7 years.
7 years, right.
Yeah. First 4 years, hustling with the banks, and the next 3 years hustling with the businesses directly. So, right. And totally, I agree with you. In the early days, we lost tons of great engineers.
That's what I'm saying. There's how did you build the team as well? That was my next question, right? Because you're gonna, it's not simple.
No, it was hard. Let's put it that way.
Right. So tell us about that. Building 1, 2, and 3, phase 1, phase 2. Because how many employees do you have now?
600.
What? 600 employees.
Yes.
Wow. So you didn't scale that up in 2 years. Tell us about that.
Oh, yes, absolutely. So, in the early days, like I mentioned, running a service business, massive respect to everybody doing it. It's crazy. And I think the very nature of why it's crazy is to bank every new revenue. Almost all the time, you need to do some extra work. And that extra work oftentimes also has a lot of creep in it. Oftentimes it's not understood in the beginning and it extends. And in all that, you are dealing with all your customers or clients' internal politics and internal idiosyncrasies. And that basically just makes weeks turns into months, sometimes months turn into years. And because it's also and also, most times if you charge a fixed fee, or it's not to your advantage because you're paying by the hour. So, and again, like you mentioned, engineers just love to work in an environment where things are pretty well defined and things are well structured, and they can get massive leverage, massive pay for the little hours that they put in. And that's just not how the service business is structured. I remember we had tons of great engineers, and holding them down to prevent them from leaving the company then was like a nightmare. We literally had to create bigger, and we saw that every time we put somebody on a project, 3 months, they would likely turn in their resignation letter.
Wow.
3 months down the line.
Wow.
Because it was battering. And that's because of the pressure on them to deliver, as well as the pressure on the customer to also simultaneously deliver. And also when it's easier to take pressure when everything is in front of you and you could see a path to clean delivery. But if there are so many variables in your front, and many of them, so let me give you an example of a variable. You came to work today to say, I'm going to deliver this piece of software and deploy it into the customer's environment so that they can have a user acceptance test tomorrow. And you get to the office and VPN is down. And VPN is down for 3 hours. And when VPN comes back up, you're trying to log into the system and it is really slow. And when you finally log in and deploy your binaries to run it,
the compilation,
you see that you have changed the database connection string. And that's how the developer spends his whole day. And at the end of the day, he did not achieve anything, but he gets a lot of pressure for not delivering. And that's just an example. So massive respects there. I think the best way to do is to charge by the hour if you can get past it, because that way it aligns interests on both sides, on your side and on the client side. But then again, because it's also a competitive market, some things just don't happen the right way. Anyway, so it's certainly not, but of course, what that did is help us really understand building very well, to a very good extent, become quite agile in all the kind of things that we want to build next, and also give us a very big appreciation for many of our team members that stayed with us through the whole evolution. The last 3 years that we have built TeamApt 2.0, or MoneyPoint and Monify, has been a pretty, I would say that we were also, carried by strong tailwinds.
Yep.
Some of these tailwinds are COVID.
Yep.
COVID is a massive acceleration of acceptance of digital payments. At the height of COVID, we were deploying at ridiculous triple digit rates per day. No, quadruple digit rates per day. Per day. And we simply, because we had a better solution, a better distribution network, and customers really loved us. And we literally spent almost zero up till today. We're probably going to spend our first dollar on marketing next month.
So this is something else I want to come to, which is the financial part, right?
Yes.
I mean, Ronit and I have already clearly established that you don't sleep, right? That's clear. So we know you've not been sleeping. So the learning curve from going from software engineer to team builder to product designer to understanding the market to development to actually learning how to build out this business. there's another key part to this, which is venture capital and your investors, right? Now, when you first started your journey, and I had the privilege of looking at your investment in the last round, by the way.
Yes.
And I saw what you've done from the last round to this round, the opportunity. It was unbelievable growth, like you talked about, right?
Yes.
And coming from the business, I could very clearly see the vision of where you were going. And this is the thing, right? At the last round, you were oversubscribed for money, but that was then. But I want to go back to the journey of, there's also a learning curve of getting the backers. Who were your first backers, and how did you find it working with, investors? Because again, 7 years ago, there weren't, Tiger, like they're coming in and doing things, or Sequoia, or myself, or Ronit, or whoever, angels. There wasn't a critical mass of people to go to 7 years. So who were your first backers, and then how did you find the investment journey and the funding journey of that? Tell us a little bit more about that journey, which your experience there in your ecosystem.
Yeah. I mean, it's very, very big question. So in the early days, we actually bootstrapped first. And I wrote a piece about bootstrapping then. And bootstrapping was simply a choice we had to make because the time to raise wasn't there. Let's just put it that way. It was not there. Two, the nature of the business we were doing then also was not typically what investors were also investing. And so between 2015 and 2019, we bootstrapped. We're quite profitable also. Of course, we had moments of cash flow crunch. I remember in the first year, I had to borrow money from my wife to pay some salaries then, couple of months that it's a photo finish to being able to meet the payroll for that month.
But she got shares, right?
Oh, yes. No, she's my wife. She's my partner. So
there you go.
She like, that's it. Like, so yeah. So massive risks there. Now in 2019, when we pivoted, we got a first backer, Quantum Capital, which is like the family fund of Mr. Jimovia, who is the chairman and founder of Zenith Bank, Nigeria's largest bank. It was quite instrumental in our earlier days. It was a $2.5 million equity deal, $5 million in total deal. We basically turned that capital around and got back to profitability in like 3 or 4 months after the capital raise then, because we went negative immediately after, EBITDA negative. So one of the things about how we've built the business so far is we had a lot of focus on profitability. And that is because of our history in the beginning, building software solutions as a bootstrap company. It never quickly occurred to us that sometimes, or what is typical sometimes in these days, is to throw away profitability and maximize growth. And of course, because we're also growing pretty much at a higher rate, 200% year on year sometimes, it did not, we did not feel like we made any wrong decision, because if you can have both, why not have it? Plus, that also gave us a special position in being able to be deliberate in our fundraising. We're not fundraising because we're going to run out of capital or not. So that was the first one. But the second round, where we basically, paid out some of our early seed investors, was now led by Novastar Ventures. The journey of discovery of Novastar Ventures was basically, Novastar is an Africa-focused fund, so they kind of understand the space a little bit more. I think that we have story to tell in the much more bigger capital belts like here, and that's why I'm here. The investors here pretty much understand Stripes of another geography, Monzo of, Revolut of another geography, Square of another geography. But anybody that has another take that is kind of like specific and particular to Africa or that particular geography might struggle. That's because investors will need to get comfortable with your story. It is not typical, it is not known, and they have a lot on their plate. So digging, burying their head and doing the work might not happen because they're just too busy. So we learned that lesson pretty hard. You basically need to ensure that your story is easily understandable. And if it's understandable, then people being able to join you on that team on your journey is kind of easier. Also, because we try to build a company in a profitable manner, in a capital efficient manner, while still maintaining high levels of growth, we found that this has made us quite interesting to a couple of investors. I mean, quite most of the investors that have seen our story love it because some of them feel like it's not standard, it's not typical. So I would say all in all, anybody that builds a great company, and it's not easy to do, by the way. That's growth that's growing in a space that is that can be understood. Will generally find it easier, assuming macros are right. For example, the macros are not great right now. Are right to be able to get the right capital partners. I mean, since Nova just started joining our board, we have raised a couple of more capital, probably not as much as as others would have raised to have gotten to our level of traction now. We are we're in a 1, 2, 3, 9 digits in revenue run rate. So it's and we've raised Crunchbase lists what we've raised, though we've raised some other rounds that are not yet listed, more than that. And the main thing then is, like I mentioned, is just to ensure that you build a high growth, quite capital efficient business that has a story that people can understand. Then it's kind of like easier then, because now you're only faced with macros at that time.
Well, again, you make things sound too simple, Tosin, and thanks for sharing all of that. I mean,
sorry.
much longer digging into the details of the product development, discovery, and
yes.
Having these conversations, but unfortunately, I think our time is limited, and on that, I'll hand back to Ronit to wrap things up.
Thank you.
Thank you, Gaurav. Maybe a couple of questions to wrap up. Maybe one clarification. Tosin, could you repeat your ARR?
Well, I mean, 9 digits ARR.
He said
9 digits. 9 digits US dollars.
Yes.
Wow.
I think we could hear him typing on the computer just to make sure the digits were correct.
I was going to say, that's
correct. That's correct.
Yeah. I mean, that must put you like, I mean, what's InterSwitch's revenue run rate?
You had to ask, right, Ronit? You couldn't resist not benchmarking now.
Yeah.
The student becomes the master kind of scenario.
Now, just to wrap up a couple of questions. Nigeria's, and more broadly, fintech in Africa, but particularly Nigeria, is having, in the last couple of years, quite a moment in terms of attention and international attraction. Compared to, say, back in 2018, 2019, the amount of interest we saw during COVID just exploded.
Yeah.
How are you seeing you're obviously spending a couple of weeks in the US. How do you see the level of interest now, given some of the non-Nigeria things that are happening in the world, the broader sell-off in technology stocks, the kind of, at least at the growth stage, a rebasing down in US valuations?
Yeah.
Is that at all dampening interest in early or mid-stage emerging market ventures for American investors, or is it still they can't get enough of you guys?
I think it's gonna trickle down eventually. there's still enthusiasm for early to mid-stage companies right now. It's still gonna. I think it will eventually trickle down. Especially if this elongates beyond what we think is going to elongate.
Yeah.
Secondly, there's rebasing or there's decline in multiples, ridiculous declines of growth stage companies. But that being said, I think this is also solid companies will still have backers. I think I've seen that clearly, and I think, of course, this is now the time where we should all rethink our business models in terms of burn and runway. I mean, active advice now is planned for 12 to 18 months of runway now. So I think this is just the time to ensure that you should build a solid business. In terms of, however, interest in early stage companies, I still think it's active. Many of these funds have raised capital, they deploy it. Also, it's not just multiples that people are looking out for. It's not, they are not yet concerned about public multiples at that stage. So but I think it's inevitable that it's going to catch up. It's inevitable.
I think he'll do that, Ronit, when he starts working with crypto and everything else and lending and stuff more.
Yes.
Maybe that ties us into the last question. It's 2025. What does your business look like? Is it beyond payments? Is there credit? I mean, I guess Moneyfy already has credit, but what does the business look like? Is it more of a broad-based financial services firm?
I think you should just see us as a Square. Honestly, I mean,
Square.
Yeah. So we're already at that stage now. You could say we're already building TeamApt or MoneyPoint 2.0 now. We started as payments, but now bringing in all the other 4 verticals: payments, credit, business operations, as well as cross-border payments. You could say those are our 4 pillars.
Right.
And we will also, through M&As or organic setups, set up in 4 more countries in Africa.
Okay.
Wow.
Yeah, so we're already at moving really hard on one of the countries. So you could say we'll be operating in the 4 largest economies in Africa at that stage, 3 more countries assignments, and providing these 4 pillars: payments, credit, business operations, and cross-border payments for them. That's it. That's the focus.
So the pitch you're walking around San Francisco is what, the Square of Africa then, if it's the 4 major economies.
That's it. It's straightforward. And that's what it is. It's proven everywhere. And we've
Gaurav, we should call him Jack, right?
We should. I mean, he's not going to sleep anymore for God knows how many years now again. So forget it. It's going to be brilliant. Well, I really wish you well on your journey, Tosin. I mean, hats off to you again.
Thanks,
you make it sound too simple and too easy. we know it's not. So kudos on your achievements, and fantastic.
Thank you.
Congratulations.
Thanks for joining us, Tosin. It's been a pleasure to host you today.
Same here, Ronit. I enjoyed the conversation. Thanks, guys.